this morning, the Bank of Ghana set to announce new policy rate today as MPC weighs fall inflation, cedi stability, and rising global energy risk at the end of 130th meeting.
So far, early indications point to a re-acceleration of headline inflation in several advanced and emerging market economies, prompting several central banks that have commenced easing cycles to pause.
Meanwhile, finance and tax analysts project the Bank of Ghana to hold policy rate at 14% amid the global trends.
We expect the central bank not to cut, not to hike, but rather maintain the policy rate at 14%.
Much later in this bulletin, Dubai Chamber leads 19 company trade missions to Accra, Ghana, as Dubai non-oil trade surges 60% to 39.6 billion dirhams. Details of our headlines and other stories, please stay with us. On to our first story now, where the Bank of Ghana is expected to announce a new benchmark lending rate later today following the conclusion of the 130 Monetary Policy Committee meeting amid improving domestic macroeconomic indicators and renewed global inflation concerns linked to the rise in crude oil prices and geopolitical tensions in the Middle East. There's more in the following report.
The monetary policy decision comes at a time when Ghana's macroeconomic indicators continue to show signs of improvement, with inflation falling sharply in recent months, the cedi remaining relatively stable, and the country recording strong reserve growth and an improved current account position. The current policy rate stands at 14%, while inflation is hovering around 3.4%, raising expectations among some analysts for a possible further cut to support private sector credit and economic growth. However, the central bank is also facing renewed risks from rising global energy prices and escalating tensions in the Middle East, which Governor Dr. Johnson Esiama says could put pressure on inflation and Ghana's foreign exchange reserves.
So far, early indications point to a re-acceleration of headline inflation in several advanced and emerging market economies, prompting several central banks that had commenced easing cycles to pause or even to reverse course. So for a commodity exporting, energy importing economy such as ours, Ghana, the transmission channels of this external shock are multiple and material.
The Monetary Policy Committee is expected to balance these competing risks as it announces its latest rate decision later today, a move closely watched by investors, businesses, and the financial markets.
Meanwhile, according to finance and tax analysts, the Bank of Ghana is widely expected to maintain its monetary policy rate at 14% in its upcoming meeting. Nelson Kujo-Kwagbaji's projection comes as the central bank balances the critical dual priorities of price stability and economic growth. The forecast follows recent data showing that Ghana's inflation nudged up to 3.4% in April. Locally, lending rates continue to hover between 19.5% and 20%, while the Ghana reference rate stands slightly above 10%. Let's take a listen.
The European Central Bank held the policy rate at 2% on April 30th, and that is actually the fifth consecutive hold. The Fed in the US also held at 3.50 to about 3.75% on April 29th. The Bank of England is also holding with UK inflation above target. The Bank of Japan is the only major central bank, I would say, that is actively moving, tightening towards 1% by year end. And so we expect the Bank of Ghana to factor all this trend by the global central bank into consideration when determining the policy rate for the next few months. I mean, the Bank of Ghana will certainly consider the balance between price stability and, of course, growth. And so we believe that there is still more room to contain inflationary pressures. I mean, lending rate hovers around 19.5% to about 20%, with the Ghana reference rate a little over 10%. And so, given all this background, we expect the central bank not to cut, not to hike, but rather maintain the policy rate at 14%.
And that was finance and tax expert Nelson Kujo Kwagbeji there. Now, still on the central bank, the first Deputy Governor of Bank of Ghana, Dr. Zakari Mumuni, has warned that the weak local implementation of poor operational framework could threaten the stability and integrity of Ghana's financial market. Speaking at a market training workshop on repo guidelines, he indicated that the need for stronger local certainty and risk management standards as Ghana's financial markets continue to expand. There's more in the following Free Business report.
The first Deputy Governor of the Bank of Ghana, Dr. Zakari Mumuni, says Ghana's growing financial markets must be supported by strong legal frameworks, operational discipline, and strong risk culture to ensure long-term stability.
The integrity of Ghana's financial markets cannot rest on informal conventions or ambiguous documentation. It must rest on legally enforceable agreements, operationally sound processes, and professionals who understand precisely what they have signed.
Addressing participants at a training workshop on repo market guidelines and financial market documentation, he noted that market activity alone is not enough to guarantee resilience.
We will continue to work closely with market stakeholders to strengthen infrastructure, deepen liquidity, and align our standards with international best practice, adapted thoughtfully.
Dr. Mumuni also stressed the importance of collaboration among treasury, legal, and risk management teams within financial institutions to ensure sound financial transactions and operational readiness.
Now time to look at how the cedi is faring against major trading currencies and how some key commodities are also faring on the global markets.
On the interbank foreign exchange markets, the dollar is selling at 11 cedis 41 pesos. It recorded no change. The British pound is selling at 15 cedis 21 pesos. It lost 22 pesos. The euro is selling at 13 cedis 27 pesos. It also lost 10 pesos. However, be guided that these figures could be higher at a forex bureau near you. On the global commodities markets, Brent crude is trading at $109.26 per barrel. Gold is trading at $4,540.80 per ounce, down by $111.90. Cocoa is trading at $4,002 per ton, down by $187.
Updates from the forex and commodities markets. That'll be all for business news here on 3FM 92.7. For more news, please check our website at freenews.com. I am Enyonam Haligah. Sunrise continues.